Let me start off and say that metal investors might want to be a bit cautious between now and the rate hike on September 26th. So let me show you a couple of things that I'm have taken notice of. Um, First off, said this before, the most heavily manipulated markets in the world, of course, are the currency markets. But in a very close second is the metals market. And, it's just a fact of life. At, in our modern markets, the metals are a large enough market that the banks can take billion-dollar positions and make serious money, but not so large that they can't control where the market goes. And as noted before, that the contract or position size limits are not enforced in the metals market. So uh, you know, the banks can dump 15, 20,000 contracts on the market, and they can push it where they want it to go. So this is just a cash cow sector for the banking industry. And there's nothing that can be done about it. It's just if you're going to trade the metal sector, you just have to accept that the gold cartel is there, and that they can um, force the market down when they want to. And it's just something you have to factor in to your strategies if you're going to trade this sector. So now let me show you a couple things that uh, I have noted before. So back in May and June, I took notice at that time that these multiple attempts to get back above the 200-day moving average, and every one of them we get an attack before the market closes, and they keep gold pinned below the 200-day moving average. That was a big warning sign that something uh, nasty was coming. And sure enough, uh, a huge, I think this was about a 20,000 contract attack uh, in the pre-market. That set off the selling, and we end up with one of the most severe um, sell-offs in the metal sector in history. Um, so at this point, when I saw the obvious manipulation and interventions to prevent gold from getting back above the 200-day moving average, that was a sign that I needed to change my trading strategies, and uh, and we did. We started using very tight stops, um, and we did not lose uh, any money at all during one of the most significant sell-offs in history in the metals market. And in fact, as of Thursday, the SMT metal portfolio is at a new all-time high. We started with $100,000 at the bear market bottom in January of 2016, and that $100,000 as of the close on Thursday is now worth $536,000. So we changed our tactics. We managed to avoid all of the selling. I don't generally sell short. I'm not very good at it. Um, I just rarely ever waste time and capital trying to short anything. So I didn't make any money on the short side as this went down, but we did make money on the long side several times during these bounces, and we made some decent money on this bounce. And then a big warning bell went off on Thursday, and I'll explain why we exited and why I think you might want to be on the sidelines. So on Thursday morning, the dollar was down. It had broken below the 50-day moving average. Gold started the day up as it should, and at no point during the day did the dollar recover. But before the close, I noticed another large attack to prevent gold from rallying above this August 28th high. That would have created a higher high, and that would have brought in technical buying. A pretty clear manipulation of the market there to um, the, prevent a bullish um, breakout, a higher high. That was a warning bell that we needed to take our profits and get out of the way, that the cartel was probably planning another attack on this sector between now and the rate hike on September 26th. We took our profits, we got on the sidelines. The SMT metal portfolio was at new all-time highs, and best case scenario, the metals maybe chop back and forth in a consolidation for the next week and a half, and the banks just take money from both sides, bulls and bears alike. But I think traders probably should be prepared for another attack, and it may be that the gold cartel is going to try and force this sector down ahead of the FOMC meeting and break this August low. And if they do, it's going to set up a buying opportunity probably on par with what we got in January of 2016. And as I've noted before, markets act like a pendulum. I call it the rubber band theory. The further a market gets stretched away from the mean in either direction, up or down, the more violent the move tends to be once the market regresses back towards the end. So the further you pull the pendulum to one side, the more it tends to swing back to the other side when you release it. And so if we do get another attack on the metal sector over the next 8 days, and the cartel does succeed in breaking this August low, I think it's going to set up a major buying opportunity, and should start the next leg of what I think is a new bull market that started in 2016. But caution is definitely warranted between now and September 26th, just because I think that rather than a choppy sideways consolidation, I think the cartel is going to try and take gold back down and break this low.